Morning, everybody. The August 1st, 2017 School Land Board meeting will now come to order. Before we begin, I wanted to recognize a few guests. Joe Quosier, a senior expert, joining us from McKinsey & Company in Houston, joins us this morning. John Monroe, a VP Government Lease Sales, EnergyNet.com. John Lauer, CIO or CTO over at EnergyNet.com, joins us from, both of whom from Amarillo. Thank you for joining, and for, of course, running the online lease sales so we can make some money for school kids. Scott Rohrman, who is a private citizen but will be sworn in before our next school land board meeting. Barbara Van Dyke, realtor at Cooper Sotheby's, joins us from here in Austin. And Ben Williams over at the Office of the Attorney General. Thank you for joining us this morning. And we will recognize Mr. Herman's last appearance at the end of today's board meeting. First item on the agenda is number 1 as stated, which is approval of the minutes from our last meeting on June 20th, 2017. After my fellow board members had a chance to review, and assuming no questions or comments, I can entertain a motion to confirm the minutes.
I'll move to approve.
I'll go ahead and second. The motion is made, seconded, and carried unanimously to approve the minutes. Next item on the agenda is the big item of today, and that's opening our online lease sale on EnergyNet.com. I am prepared to hand over the bid key box. Thank you. As we undertake the online lease sale, we will take a chance at looking at the consent agenda on number 3. And assuming no questions, I believe there's one item, 3A23, which was pulled prior to today's meeting. But barring that and assuming no questions, comments, or objections at this time, I could entertain a motion to confirm the consent agenda.
So moved.
Seconded. Motion is made, seconded, and carried unanimously to approve the consent agenda, but for A23. Items 4 through 7 will be discussed in executive session, and to do so, we enter into under Chapter 551, Subchapter D, Section 551.071 of the Texas Government Code for discussion, consideration regarding pending contemplated litigation and or settlement offers. We're also going to seek sound attorney advice and counsel related to items 4 through 7 on the docket under 551.072 for discussion, consideration concerning purchase, sale, exchange, lease, or value of real property related to items 4 through 7 on the docket. And following executive session, we will reconvene in open session. Before we enter executive session, for the record, we are pulling item number 8 from the agenda as well.
Okay.
Cape Town, they said it can be really bad. We looked out the 5 days we were there.
Oh, nice.
Safari.
The open session of the August 1st, 2017 School Land Board meeting will now resume with item number 4. Item 4, yes, please.
Good morning, Ken Mills from the Office of General Counsel. Staff recommends the proposed resolution and settlement with EOG Resources regarding its self-reporting on a total of 55 different leases, as well as the 2 audits in Webb and Aransas counties as presented in executive session.
So moved.
Second, motion is made, seconded, and carried unanimously to approve item number 4.
Thank you.
Thank you. Next item on the agenda is number 5.
Good morning. Susan Sugar with Asset Management. Number 5 is an application to purchase permanent school fund in Eastland County, file number 57821. And staff recommends approval of the sale as presented in executive session.
Any questions at this time?
No. So moved.
Thank you.
I'll go ahead and second. Motion is made, seconded, and carried unanimously to approve the item. Thank you for that. Next item on the agenda is number 6.
Good morning, Amber Long, Asset Management. Staff recommends approval of the disposition of excess land per the terms discussed in closed session. Any questions?
No. So moved.
Seconded. Motion is made, seconded, and carried unanimously to approve item number 6. Next item is number 7.
Amber Long, Asset Management. Staff recommends approval of the disposition of PSF land per the terms discussed in closed session as being in the best interest of the PSF. Any questions?
So moved.
Seconded. Motion is made, seconded, and carried unanimously to approve that item. Item number 8 has been pulled from the docket, and so we will ask our Chief Investment Officer, Rusty Martin, to give us a quarterly investment report.
Thank you, Mr. Chairman. Members, for the record, I'm Rusty Martin, Chief Investment Officer. I'm pleased to present you with a quarterly investment report of the Texglo Permanent School Fund Real Assets Investment Portfolio for the period January 1 through March 31, 2017. As you know, the performance measurement calculations and the statistical data that are in the report were prepared by State Street Bank and its Private Edge Group, which are the custodial accounting and performance measurement agents for the portfolio. Just a brief market summary before we get into the numbers. First quarter, U.S. GDP increased at an annual rate of 1.4% after increasing 2.1% in the fourth quarter of last year. Also, the unemployment rate ended the quarter at 4.5%. The Fed slightly increased its Fed funds target range by 25 basis points in mid-March, raising it from 50 to 75 basis points to a target range of 75 to 100 basis points. They also decided to maintain their policy of reinvesting principal payments from its holdings in agency mortgage-backed securities and rolling over maturing Treasury securities at auction. This policy is expected to remain in place until the normalization of the Fed funds rate is well underway, thus maintaining accommodative financial conditions. Also, the Fed expects that economic conditions will evolve in a manner that warrants only gradual increases in Fed funds rate. Thus, that rate will probably remain below levels that are expected to prevail in the long run. In the U.S. commercial real estate market, as measured by NPI, it returned 1.55% for the quarter ended March 31. Its trailing one-year return was 7.27%. All of the quarterly individual sector returns were positive for the 28th time since the second quarter of 2008, except for hotel. Industrial was by far the best performing sector. First quarter returns for the NPI sectors were hotel minus 0.16%, retail was up 1.56%, apartment 1.3%, industrial 2.83%, and office 1.26%. In the energy markets, WTI oil prices fluctuated in and around the $48 to $50 a barrel range for most of the period, ending the year at $50.60 a barrel, which was about a 2.6% decrease from the 2016 year-end price of $51.97 a barrel. Prices were primarily influenced by OPEC compliance concerns and a steep drop in U.S. refinery utilization. However, the acknowledgement late in the first quarter that OPEC was 95% compliant with its targeted production cuts of 1.2 million barrels per day helped stabilize markets and lift oil out of a sell-off. Most of the sell-off was related to concern over a 25% increase in the U.S. rig count and increased oil production in U.S. shale plays. But many analysts are forecasting an acceleration of crude inventory drawdowns throughout 2017 due to a rebound in refinery utilization and an expectation that OPEC will extend and or expand its production quotas. Natural gas prices averaged $3.02 per million BTUs in the quarter, but ended at $2.88, which was about a 19.7% decrease from the year-end price of $3.59 a million BTU. The primary driver of the lower prices was extremely warm weather in the U.S. in February. However, most analysts continue to expect that rising industrial demand, LNG exports, increased exports to Mexico, and continued coal-to-gas switching will create a tightening of the U.S. gas market in 2017. In accordance with the investment strategy that was adopted by the IEC in January of this year, the primary focus of the external portfolio during the quarter was on potential investments and co-investments in infrastructure, co-investments in energy, and niche opportunities in real estate. Also, in accordance with the investment strategy, the internal portfolio remains focused on dispositions. Turning to page 2 of the report, and looking at the performance summary, we'll go through some of the numbers. Total NAV at the end of the quarter was $6.019 billion. The external portfolio represented just under $3 billion of that, about 50%. The internal portfolio was about 3% at $220 million, and the remainder was in cash equivalents awaiting funding from capital commitments. With regard to the external portfolio, which is the first section of the table there, performance was outstanding once again, 4.01% in the quarter versus 178 on the benchmark, which is a beat by 223 basis points. The real estate sector of the portfolio was up 2.3% for the quarter. Infrastructure was up an extremely robust 12.12%. And the energy sector was basically flat at a minus 0.02%. On a one-year basis, the portfolio did extremely well, returning 20.99% versus a benchmark of 6.66%. So that's a beat of 1,433 basis points. On the three-year basis, portfolio 14.51 versus 809 on the benchmark. That's a beat of 642 basis points. And on the five-year return, 14.66 versus 896 on the benchmark, beating the benchmark by 570 basis points. At the end of the quarter, about 37% of our total existing capital commitments remained unfunded. 26% of real estate was unfunded, 42% of infrastructure, and 43% of energy. The internal portfolio saw a decrease in the period of a minus 1.88% versus an increase on NPI of 1.55%, representing a difference of a minus 343 basis points. On the one-year return, the internal portfolio is at 480 versus 7.27 on the NPI. On a combined basis, the portfolio returned 3.59% versus 178 on the benchmark, outperforming the benchmark by 181 basis points. On a one-year basis, the portfolio returned 19.67% versus 6.66% on the benchmark, which is outperformance of 1,301 basis points. So a very good quarter and very good annual returns continue for the portfolio. On a purely invested basis, when we look at diversification, the combined portfolio was still slightly over-allocated to real estate at March 31 at 36% versus a target of 33%, but this will continue to change over time as more of the commitments to infrastructure and energy are funded. For example, at the end of that period, the real estate allocation on an invested plus an unfunded commitments basis was at 33%, while infrastructure was 28% and energy was 39%. As far as diversification is concerned, we're fairly close to the target allocations in the investment policy statement. Allocation to the U.S. is 85% versus a target of 75%. The international allocation is around 7% compared to a target of 10%. And the allocation to Texas is about 8% compared to a target of 15%. This is a non-voting item, but I'm happy to answer any questions you may have.
No questions? Thank you, Rusty. Good.
For the record, to beat the benchmark on a quarterly basis and on a yearly basis by over 2x is pretty outstanding. So thank you for your work on that.
Thank you.
Thank you very much.
That being a non-voting item, we can begin announcing the high bids for online lease sale to the extent that those have been tallied. Mr. Hatter, if you have an update. Thank you.
Good morning, Robert Hatter with Energy Resources. Staff has opened all the bids along with the assistance of EnergyNet. Tallied the bids for permanent school fund lands. The total high bids equals $41,928,938.95 from 28 bids covering 8,880 acres for a total average bid per acre of $4,721.44. Staff has reviewed the bids and recommends the board approve them and gives us permission to go ahead and read at this time.
Is there a motion?
Do we make a motion now or they read them? We okay? So moved.
Either way, I mean, you can accept them now,
bids.
and then we can.
High bids.
I'll go ahead and second the motion. The motion is made, seconded, and carried unanimously to approve item number 2. At this time, the bids will be read for the record.
Thank you.
Thank you, Mr. Hatter.
Thank you.
Deborah Cantu, Energy Resources. I'll begin reading all bids that were received. Marginal number 1, Scala Energy Assets LLC, $679,731. Marginal 2, Scala Energy Assets LLC, $555,180. Marginal 3, Ring Energy Incorporated, $81,917.50. Marginal 3, Fortuna Resources Permian LLC, $81,375. Marginal 5, Vestige Energy LLC, $4,940.53. Marginal 6, EOG Resources Inc., $50,000. Marginal 7, Hunt Pettit, $339,706.32. Marginal 7, Jagged Peak Energy LLC, $38,021.76. Marginal 9, Mongoose Energy LLC, $275,201.50. Marginal 10, Mongoose Energy LLC, $276,012.80. Marginal number 11, Mongoose Energy LLC, $60,000. Marginal number 12, David Gordon, $6,627,859.20. Marginal 12, Martin Oil and Gas LLC, $2,593,280. Marginal 12, Energen Resources Corporation, $1,984,000. Marginal 13, Atlantic Resources Holding Company LLC, $311,080. Marginal 14, Jetta Permian LP, $652,720. Marginal 15, Jetta Permian LP, $825,440. Marginal 19, Jetta Permian LP, $825,440. Marginal 20, Jetta Permian LP, $6,501,760. Marginal 21, Jetta Permian LP, $1,478,160. Marginal 22, Jetta Permian LP, $758,160. Marginal 31, Jetta Permian LP, $332,720. Marginal 32, Jetta Permian LP, $647,972.20. Marginal 36, Jetta Permian LP, $4,569,040. Marginal 37, David Gordon, $6,627,859.20. Marginal 37, Energen Resources Corporation, $5,248,000. Marginal 37, Martin Oil and Gas LLC, $2,593,280. Marginal 38, David Gordon, $901,139.20. Marginal 38, Cimarex Energy Company, $3,713,920. Marginal 38, Martin Oil and Gas LLC, $2,593,280. Marginal 39, Jetta Permian LP, $3,941,760. Marginal 40, King Operating Corporation, $48,117. Marginal 41, XTO Energy Inc., $7,840. Marginal 41, RD Motley, $6,720. Marginal 43, XTO Energy Inc., $20,702.50. Marginal 43, RD Motley, $17,745. Marginal 44, XTO Energy Inc., $15,557.50. Marginal 55, Vaughn Resources LLC, $13,862.74. Marginal 56, Vaughn Resources LLC, $10,903.07. Marginal 57, Midland Petro DC Partners LLC, $6,580.50. Marginal 57, Myers Engineering, $2,440.88. Marginal 58, Verdun Oil Exploration LLC, $512,922.50. And this concludes all the bids.
Thank you for that. Since we've already moved to accept the high bids, want to also thank EnergyNet.com as well and Asset Enhancement for another successful bid, beating expectations once again on the lease sale. So thank you very much for your hard work. And there being no further business before the board, before we adjourn, I want to recognize my colleague David Herman. He's served this board since 2001. I believe I'm your third land commissioner to be with. And when you look at the size of the endowment and how much we have produced for public education here in Texas, I think this gentleman sitting right next to me deserves a lot of the credit. So I know I speak on behalf of a lot of staff in saying that we're thankful for your friendship. We hope you are not a stranger. Your successor will certainly have some big boots to fill here on the board, but I just want you to know it's been a pleasure and honor to work with you. So.
Well, I want to thank you and for what you do for the office. You've really fostered it in a good way, and I look forward to watching you do it for many more years. And it's an honor to serve with you. It's an honor to serve for the Attorney General, and it's also been an honor to work with all y'all. You know, you make it so much easier to make decisions because you're very good at informing me on what I need to know, and all the resources and the knowledge and experience is really helped me, and And Stephanie, you've been wonderful. Thank you very much. And I'm sure, Scott, you're going to enjoy it. You're going to enjoy working with these fine individuals. And the land commissioner's wonderful. Mark, everyone. I mean, I can name a lot of people that have been really, I've known a long time here, and I'll miss them. But thank you very much.
Thank you.
On
Don't
to
be
new
a stranger.
things. Okay, I won't. Thank you.
There being no further business, we are hereby adjourned.